Hi, I'm Patu from freefincal. Today, let's talk about small cap mutual funds, something that young people like to talk about a lot. And they don't like me talking about it, but they like talking about it. So, every time stocks in the small cap universe moves up prominently, the interest in these funds zooms up. And there are some people who always make claims like a small cap mutual fund will always beat all other categories over the long term. Uh, the point is there any proof that small cap mutual funds will outperform in the long term? I mean, it's very easy to say, I believe in small cap mutual fund. That's fine. If you say, I believe without data, that's fine. It's your money. You can do what you want with it. But you can't claim that it will outperform everything else in the future without data, can you? It makes no sense. I mean, at least for reasonable, rational people, which are anyway a minority, it makes no sense. And I'm addressing only that minority. Now, the short answer is there is no proof this way or that way. And whatever little proof we have, it doesn't look too great. The biggest problem is our stock markets are quite young. And even for the US, where you have S&P 500 data ranging from the 1870s, the small cap and mid cap index data for those markets are also quite relatively young. Now, for the Indian market, the Nifty Small Cap 250 index was launched only in April 2016, and the data we have from April 2005 is all back tested. So even within this short period, even from April 2005, excuse me, 2005, did I say something else? April 2005, the small cap index, as we saw in an earlier video, has always underperformed the Nifty mid cap index. These are 10-year rolling returns. There are 2,262 data points there for the 10-year small cap uh, returns, and it has always underperformed. And if you look at the scenario for the US, of course, if somebody is saying the small cap indices will beat the other sectors, then that must be true for other markets as well. That must be true of the US market as well, where it is much more easier, supposedly, for small cap businesses, small cap businesses to thrive. Small businesses to thrive. So how does it work there? Well, we don't have too much data, so I had to for the total returns. So I had to take the price return and add the dividends based on the current total returns, and this is what you see. The white line is the small cap 600 index. The pink line is the 500 S&P 500, the large cap index, and the S&P mid cap 400 is in brown. And you can see that the brown line is pretty much on top. The small cap index has failed to beat the mid cap index even in the US. So at least for those who take data seriously, the moral of the story is very clear. It is extremely unproductive to invest in a small cap index. But then people will be quick to jump on me and say, what about actively managed small cap funds? Surely that will be easy to beat the small cap index. With respect to the US data, I'm not able to find any free resources to do it. I can get myself a Morningstar subscription and do it, but I'm just looking at the cost benefit analysis. It's not looking too great for me. But I have done the situation for the Indian market, and I've made it amply clear. It is extremely easy for an actively managed small cap fund to beat the small cap index, and I have shown this several times. However, if you compare the performance of the small cap index with a mid cap index, then things are very, very poor. Out of 14 funds, I've talked about this earlier, out of 14 small cap funds, only 2, 3, or 4 small cap funds have consistently outperformed the mid cap index. Then people will say, why are you comparing a small cap fund with a mid cap fund? Look, I'm not trying to do a PhD here. If I was doing a PhD thesis, then I will compare a actively managed small cap fund with a small cap index. I'm not doing a PhD here. I'm doing something much more worthwhile. I'm trying to invest my money, and I must get the best bang for my buck. I respect my money that much. I don't go invest based on random opinions. And since I respect my money, I need the best bang for the buck. So why should I invest in an actively managed small cap fund, give so much expense ratio away when it can't beat a mid cap index? We have a lot of options in the mid cap segment. We have a mid cap 150 index fund. We have yeah, somebody just reminded me that the UTI low volatility fund is actually a large and mid cap fund. We have large mid cap 250 indices. So the options in that space are growing. And we have our good old useless Nifty Next 50, which incidentally, Nifty Next 50 has also outperformed many actively managed small cap funds. Maybe not in the past few months or couple of years, but before that it certainly has. So the record of small cap actively managed small cap funds for the little history that we do have is not too great. So the data is extremely poor when it comes to supporting investing in actively managed small cap funds. At the very least, I would say there's no proof. If not, uh, the proof is against actively managed small cap funds. So, I mean, then people will say, no, no, my fund has given 15%. I have been investing in XYZ fund. How can you be sure that's going to happen? That's going to that performance is going to continue in future. That's just such a newbie mistake. People who have been investing in mutual funds for 10 years or more will tell you nothing lasts forever. No mutual fund stays on top, whether it is an active fund or a passive fund. Nothing, no idea stays on top. Everything is cyclic. We don't know the frequency of that cyclicity. It's just silly to say to base your stand of investing in actively managed small cap funds or small cap funds on anecdotes like that. So, well, that's that. So for those who take this kind of analysis, this kind of rationale seriously, our recommendations are definitely stay away from small cap index funds. Um, if you are so interested in active small cap funds, then you must have at least some kind of periodic profit booking strategy. You can't simply blindly do an SIP. That also we have talked about in a video previously. Just have some kind of strategy. People will say 10% exposure is okay, 15% exposure, but how much benefit are you going to get from a 10%, 15% exposure? And also that 10%, 15% exposure is not going to stay at that level. Tomorrow it will become, that 10% will become 20%. What will you do then? Do you have the courage, the guts to sell that 10% and push it into either large cap or into debt, and you don't worry about tax? Do you have the guts? uh, Most people I meet don't have it. So I would suggest it's better to stay away from all kinds of small cap. I know people get very irritated when I say this, but I have not yet seen a rational argument in favor of investing small caps, because most arguments, they just talk about this, look at this, look at that. There's no data. They don't offer me any data to uh, consistent data which constitutes research. I mean, I can show one data point, see what XYZ fund has done over the last 30 years. That's just one data point. That's not good enough. So anyway, that's all I have to say. I'm sure many young people are very irritated by this, but that's fine.